Digital identity is the backbone of modern fintech. In this topic, we'll define what a digital identity actually is, walk through its life cycle from enrollment to deprovisioning, and connect those stages to real-world eKYC controls and onboarding flows. You can think of digital identity as an engineered trust foundation that everything else plugs into. Legacy data, documents, and signals are consolidated into a single, well-governed identity representation. On top of that, you build four major capability layers. First, eKYC and onboarding, creating identities and proofing that they're real. Second, fraud controls, detecting synthetic or stolen identities as early as possible. Third, compliance, AML screening, sanctions monitoring, and regulatory reporting. And finally, user experience, giving good customers seamless, risk-adjusted access without weakening controls. Now, separate the person from the labels we attach to them. The identity is the person. Identifiers are the handles: national ID, account number, email, device ID. Each is just a different pointer to the same subject. Architecturally, you do not want one global identifier reused everywhere. That becomes a tracking superkey and a single point of failure. Instead, design systems so each context has its own identifier, mapped through a secure hub. That way, compromise in one domain doesn't automatically expose the user across your other platforms. For each data element in your identity system, think along two axes: how strong it is as evidence and how often it changes. Government IDs and passports are high assurance and mostly static. They're what you lean on for initial eKYC. Email, phone, and usernames are easier to collect and great for access and UX, but weaker as legal proof. Static attributes like date and place of birth help bootstrap identity proofing. Dynamic attributes, addresses, device fingerprints, risk scores, change frequently and power continuous CDD and EDD risk assessment after onboarding. You also can't treat all identity data as equally sensitive. Picture three broad bands. Generic or contextual data, like geolocation history or behavioral metadata, is still regulated, but usually lower risk. Standard PII combines attributes such as name, date of birth, and address, which can identify a person on their own. Sensitive PII is the crown jewels: government IDs, biometrics, account numbers, credentials. Your architecture should apply progressively stricter minimization, purpose limitation, encryption, and access control as sensitivity increases. At the lifecycle level, identity behaves like a state machine. A user is first enrolled, then proofed and verified. Once you trust the attributes, you bind them to credentials that can be used for authentication. During active use, most of your login, authorization, and KYC reuse happens. Recovery handles lost devices or forgotten credentials without forcing users to restart from zero. Revocation cuts off credentials that should no longer work, and deprovisioning retires the identity record itself, aligning with NIST 863 and eIDAS assurance expectations. Enrollment and identity proofing answer one core question: does this digital record truly belong to a real, specific person or business? Architecturally, this is where you combine signals: document checks, data validation from bureaus or registries, and biometric or liveness checks. At the same time, you're defending against synthetic and stolen identities, forged documents, and increasingly deepfake-style attacks at the front door. Once credentials are bound and the user is active, your goal is to match authentication strength to transaction risk, rather than treating every action the same. Low-risk events like daily login can use passwords or device tokens. For medium-risk actions, such as high-value transfers, you step up with OTP or push confirmation. For truly high-risk scenarios, cross-border payments, new device registration, you require the strongest factors: biometrics, fresh identity proofing, or NIST-AL-aligned methods. From an architectural perspective, this is policy-driven, risk-based authentication instead of static, one-size-fits-all MFA. Recovery, revocation, and deprovisioning are where identity systems often fail in production. Recovery is about helping legitimate users regain access after loss or lockout. You'll rely on backup factors, support flows, or in-branch checks. But every recovery path is a prime fraud vector, so you must combine strong verification with tolerable friction. Revocation is your emergency brake, quickly invalidating credentials, tokens, and device bindings when compromise is suspected. Deprovisioning is controlled offboarding, removing access while still meeting archiving and AML KYC retention obligations. It helps to visualize 3 tracks running in parallel. First, the abstract identity lifecycle: enrollment, proofing, binding, active use, and closure. Second, the concrete fintech journey: app download and data entry, KYC checks, login and sessions, periodic CDD refresh, and finally account closure. Third, the threats surface at each point: drop-offs and false positives during KYC, weak binding leading to account takeover, insecure recovery creating orphan credentials. Your architectural job is to align these tracks and place the strongest controls where failures would hurt most. eKYC should be treated as a continuous control system, not a one-time gate. At enrollment, you establish high-assurance identity using strong signals, document checks, biometrics, liveness, and authoritative data. During active use, you rely on lighter weight, high-frequency controls, behavior analytics, device intelligence, IP, and geovelocity checks, and AML transaction monitoring. During recovery, you reuse previously bound factors like trusted devices or biometrics to safely regain access. Across all phases, you schedule periodic refreshes when key attributes or risk levels change, keeping KYC always current. Designing identity systems is really about choosing how much friction to apply for a given level of risk and required assurance. For low-risk, low-value use cases, you can stay at eIDAS low or NIST EL1 and keep flows almost invisible to the user. For standard onboarding, you move to substantial assurance, like IL2, with stronger proofing but still acceptable UX. For high-value, cross-border, or particularly sensitive actions, you deliberately add heavier friction at IL3 levels. When you calibrate this well, you balance fraud prevention, compliance, and customer experience. To wrap up, keep 4 habits in mind. First, separate identities, identifiers, and attributes, and guard PII with hard boundaries. Second, treat each lifecycle step as a security control, not just a process step. Third, assume eKYC is continuous, not one-off. And finally, enforce disciplined lifecycle management, especially around revocation, recovery, and compliant offboarding.